Before I introduce everyone, I hope everyone's read the CV, so I don't spend time reviewing them with you. But it's I guess I just want to relate one quick experience that sort of puts me in perspective of, I think, you. About 20 years ago, I changed careers. I was a senior investment banker, and I became an academic. I did a PhD. I sat through classes and evaluated people teaching me often subjects in business school that I knew more about. And I realized how little they actually didn't think of me in the audience as students. It was really easy to be critical, but after I finished my PhD, I was assigned to teach first-year undergraduates. I stood up in front of a room of 300 19-year-olds, looking the way I do now, right? And as I looked out, I said, why are they gonna listen to me at all? Like, why do they care? And I said, oh, I could tell them that, gee, I know a lot about what they're studying. But actually, as I looked out, the moment dawned on me and I said, you know what? It's nice to meet you all. I have 2 teenagers at home who are applying for university right now. And they're going through all the crap that you just did. So I really understand what you must feel like showing up here on the first day for my class. And it was great. After that, I got the Teacher of the Year award. So what they really cared about wasn't that I knew anything about finance. It was actually that I knew something about them. Okay, so it's kind of an interesting sort of perspective. So you've got a panel here. We all have quite diverse backgrounds. In my case, as mentioned, we look at things really differently. So I'm on all these boards. I'm on the board of a RegTech and this, that, and the perspectives are really, really different from each one. So I hope we'll be able to cover all these things. I look forward to questions. So you'll find on your Brella app, if you have a question, if you go to the bottom of the toolbar, click where you've got the 3 dots and then it's Q&A and you can put them on. So we'll do a round of questions. We'll all try and give you different perspectives, I think, on it. Maybe we don't have to try, I'm sure we all have them. And then we'll take questions and I'm sure we'll have a fascinating time. So with that, our first questions, you got a hint of them and on the program, but we want to start with really what are the issues at the top of the agenda for compliance and RegTech leaders, and specifically at all institutions rather than just major institutions. So I was going to pass that question to Claire. Welcome.
I think for me, over the last couple of years, we've seen an increase in regulation and particularly focused around, I work in insurance intermediation, so we're solo regulated by the FCA. And the biggest focus from them, I feel, has been culture. And how do we demonstrate our culture? How do we ensure that we have a culture that promotes speaking up, that promotes good behavior and values, and included within that umbrella is the diversity and inclusion work, which we're starting to see much more of from the FCA and other regulators with the recent discussion paper with the Bank of England and the PRA. And how we're expecting to see much more questioning from the regulators in proactive engagement meetings about how we're operating in the D&I space. Other things that take up an awful lot of my time, liquidity, obviously as a result of the pandemic, FCA and PRA are concerned about firms' liquidity. We're being asked to hold more cash, regulatory cash, than actually our modelling tells us to because of their concerns, not particularly with our firm, in fact not with our firm, but just the sector in general. And then operational resilience, I think, is impacting all firms, so all enhanced firms. That's taking up an awful lot of our time.
Thank you. You do it.
Yes, certainly. So I think, firstly, I'm very pleased to be here because it's not often that one is sat physically on a stage in any context in the COVID era, but also next to people who are in that ecosystem. So from the vendor side, the whole idea is to align the value we deliver with what drives value for our clients. And to hear Claire say this, right next to me is very meaningful. And on my right, we've got Angus from the Bank of England. So key player in the regulatory space. And so I think in terms of what Claire's just said, I think culture, it's a very interesting concept to mention first. You wouldn't expect it. You would think, oh, it's the volume and pace of reg change, more on that in a second, right? And how do we interpret the rules and everything and map them onto our internal policies? But I think the culture aspect is key because for RegTech to really work and be implemented correctly, if at all, there needs to be a cultural kind of a mindset, behavioral shift, because it changes the way that compliance, legal, risk professionals operate, right? And so that's an organizational behavioral shift, it's a communication shift, it's a workload shift. And so I think culture is going to come up quite often today as a keyword, and I thank Claire for mentioning it up front.
Yeah, sure. So, hi, I'm Angus. I lead data collection and transformation at the Bank of England. So, firstly, I work for the Bank of England, not the PRA. So, I can't talk for the PRA, and I have to apologise for that. And secondly, my opinions are my own. They're not the Bank of England's or the PRA. So, I just got a caveat before I start saying things that I'm going to get in trouble for. So, I think there's a couple of really interesting ideas and points that have been brought up here so far. So, one way I think of looking at RegTech is that RegTech is almost simply automation of kind of manual processes. Claire and I were chatting earlier about the number of times that people take regulatory documents, PDFs, HTML documents, etc., the rulebook, the handbook, and they copy sections of that rulebook and they paste it into Excel. And I used to do that. I was a risk analyst. I used to do that. And one way of viewing RegTech is it's just making those manual tasks simpler and faster. And there's other bits and bobs which you can do better. Once you've got that Excel spreadsheet, and that's actually the start of your workflow. I used to be a risk analyst. We used to monitor compliance and check compliance. And all of my work then became updating data in that Excel, which started off with that piece of text. And now you can get systems, that I'm sure many of you supply here, which rather than having an Excel spreadsheet, you have all that data captured in a system that makes it accessible for posterity, and you can analyze it and you get management information, and it's just a much better Excel document. So that's one way of viewing RegTech. I think the other one, and it really speaks to Claire's point and to Ian's point, is RegTech more than that, right? Is it a cultural change? And I think this is, particularly for the regulators, this is really interesting. Because if you think about the way that we write rules and regulations, we haven't really changed that much from, probably kind of, 300, 400, 500 years ago, right? We're still almost the equivalent of writing pieces of paper, printing those pieces of paper and then reading those pieces of paper, and then copying information out and putting it into Excel. And if you think of a world actually where not just we're regulating machines, but a lot of machines are really intermediating our interactions with the financial sector, then you think of a world of actually opportunity for regulators and for authorities like the Bank of England. And you think, well, how potentially could we change the way that we regulate? How could we make the most of this sector that's growing up, etc., to achieve our regulatory outcomes better? Can we save money in the regulatory compliance process? Can we make regulatory change faster? And I think that's what's really exciting for me, certainly, thinking about RegTech and thinking about sort of the long-term vision of RegTech.
Thank you. So if I could put my own views, but if I start with a really kind of funny one. I just attended a session recently with somebody named Matt Parker. I don't know if anybody's heard of him. He's a math teacher, math professor that's also a stand-up comedian. And he uses all kinds of technical facts to make you aware of things. And one of the things that he brought up was there is actually an international organization that looks at leaked corporate spreadsheets for their accuracy. They just take the spreadsheets and look at see if there's errors in them. The percentage of errors in the spreadsheets they've looked at is 94% of spreadsheets have errors. Okay, so when you hear this about pasting and cutting, it's just frightening. So thinking about we're at this point where we've got massive amounts of data. We want to use it. We'll talk about regulation in a minute, but one of the critical things, I think, if you're a regulator, is trying to figure out today how you divide your time between actual supervision, personal meetings, and data that you collect and how the data comes in. And it's always been a question of reliability. I have to say, in my regulatory past, you did wonder every once in a while if someone was lying to you, but you kind of thought you could rely on the numbers. But today, I wonder if it's the reverse, right? So when you start thinking about what I think leaders want is you want information, you want better information, you want accurate information, and we should be able to get it with all the data that we've got and make lives easier. So I think it's about improvement is really the critical issue for everyone involved with RegTech, is how does the industry improve and make us all more efficient at decision making. So I think it's a good lead into sort of regulation. I was working at both the FSA, FCA, and the Bank of England when after the last financial crisis, and started to see the wave of regulation that came in. You can't blame it all on the regulators themselves. It came from different directions and politicians at the same time. But the question we wanted to sort of throw around was, is this weight of all this new regulation becoming unmanageable? It's a discussion point, not a view. And how do we cope with all these increasing regulatory frameworks? Obviously, prudential conduct are the big ones, but there are others on operating sides as well. So, Yin, can you start us off with that?
Absolutely. I actually think about this topic all the time, 24/7, given my role at Cube. Just for further context, Cube is a regulatory intelligence platform. We translate that raw, often not quite structured data from regulator and legislation websites into insight and intelligence for our clients. And that's all the way from the rules in them all the way to mapping the rules onto internal policies. And so when it comes to Pete's question, I mean, becoming unmanageable, the answer is no, it's been unmanageable, right, for at least a decade, if not more. And I think let's frame the question a bit differently. So it's unmanageable by humans alone. I think Angus has illuminated that for me with his Excel anecdote. But it is manageable if we have the combination of humans and machines. I hate the word AI, it's massively overused, but humans and semantic AI is the particular category to focus on, right? Understand the meaning of these things. And so you have to get that balance right to make it manageable. But what has made it so unmanageable? So on one side, it is the '08 crisis, but it's also the fact that, of course, we live in this era of rapidly evolving technologies. Many of you guys in this room represent that. Innovation is at an all-time high in finance. And so obviously it's great, but then you need to balance that. There are security concerns, stability concerns that come from rapid innovation that's unchecked, right? So that's kind of the broader ecosystem you're playing with. Does that answer your question?
I think you're getting us there.
I have more to say, but I'd like to hear from my colleagues before I keep going.
Claire, do you want to
So there's no doubt that the volume of regulation has been increasing massively over the last 10 years. And not just the volume, but it's the deadlines that you have to adhere to this regulation. So in our space, we've had some new general insurance pricing regulation that's coming in. And it came in with some really punchy deadlines. We're also seeing that with the IFPR work that they're doing in the investment space. So it's not just the volume of stuff, it's just the challenging bit is how quickly you have to implement these things. And they're not simple things to implement. They involve, wholesale changes. I think I'm also fortunate. I sit in the wholesale space. I'm not in the retail business dealing with consumers, where I think the focus has been much greater over the last few years and will continue to be, given the vulnerable customers that the FCA is concerned about post-pandemic. And then the other thing I'd say is that it's not just the volume, it's also the scope. So we've already spoken about diversity and inclusion. When I speak to my American colleagues, they're flabbergasted that the FCA is concerned about, non-financial misconduct, diversity and inclusion, climate change. They can't believe it. And they think it's, the regulators massively overstepping the mark, which I will remain silent on. But so I think it's not just volume, it's scope and deadlines.
Can I just add quickly to that? Yes, so another dimension of it, of course, is the fact that most of the people in this room, of course, operate globally. So it's scope, but multinational scope, over 100 countries, right? And so sometimes you have regulation about a similar topic, but the regulators have, I guess, different perspectives in different countries due to, let's say, even cultural perceptions on privacy, for example, cybersecurity, right? So how do you comply with seemingly contradictory, on the surface level at least, requirements, that's up for grabs. How do you even translate from these obscure languages and rely upon the quality of that? It's that multinational, multi-jurisdictional dimension that makes the volume and velocity and complexity even more of an issue. And I think also these regs are living documents, right? So the deadlines, of course, it's deadlines, but for ever evolving texts, narratives, and you can't interpret them in silos. So you have to think about how do you understand something when it cross-references other regulations. And so it's not as simple. So the deadline meeting is difficult also because the interpretation is difficult. I'll stop there.
That's fine. Angus, I don't know if you find it okay or conflict or.
I mean, I think I don't work for the PRA, so this is my opinion. I think if we go back to and Pete, you referred to it, if we go back to why do we have regulation, right? It's important, and as Claire talks about, it's about protecting people. It's about stopping things like that happened in 2009 to preventing financial crises. So it is important. I think. One of the things that hasn't really happened so far, and I think hasn't necessarily happened as much as perhaps the Bank of England and the PRA would like, is firms investing in regulation and treating regulation as something which is part of the way the financial system works, and understanding that and saying, well, actually, therefore, we need to invest in this as part of our business. And so there was a recent PRA letter talking about regulatory reporting, and one of the key messages of that reporting was, firms don't take regulatory reporting as seriously as they take, for instance, financial accounting when they publish their accounts to their investors. And they don't invest in their systems, and they don't invest in regulatory management in the way they invest in other parts of their business. And without that investment, then, quite frankly, yes, I think over time it's going to be very hard for industry to continue to meet their regulatory compliance requirements and to respond to regulation which changes to the needs of a changing world, quite frankly. And so I do think there needs to be a bit of a mentality change on behalf of industry to recognise that and to invest more.
I think one thing I'd add is, particularly, well, for the UK, we're still waiting to see what the regulatory landscape will look like post-Brexit, now that the UK is somewhat able to, plough its own regulatory course. So I think we're waiting to see whether that will mean, a relaxation, whether we'll go back to regulation of the past or what we'll see. So I think that will have an impact on the volume of regulation that we're seeing.
I think when we start to think about regulation, I know early on in my career, I remember being stopped from doing some banking business. And I was told the regulations didn't allow it, which for 99% of my colleagues ended the conversation. And I started to say, well, why? I want to understand the regulation. I spent a lot of time with the bank's lawyers and external counsel. And it led to rapid career advancement into strategic issues for the bank I worked for. And I slowly realized that to run a bank, you actually, at other financial services industries, you need, it's like two brains. It's really quite, there are very few industries that actually deal with this, where you've got to make a decision and think about what's the economics first, and you've got to think about the regulatory. So just in a really simple way, if you haven't trained in actually financial services, this is one of the most easiest financial decisions for a financial institution is actually dramatically increases your economic capital and destroys your regulatory capital with one easy decision. Actually, that's called just taking a little more risk. And it's really true, because that's what happens is your regulator says, well, you've reduced regulatory capital, but your shareholders say you're going to make more money, right? And it's just that, basic, and it gets beyond that to an enormous degree. So you've got this kind of two-brained concept that you have to run a financial institution, which I think is often a challenge for the RegTech industry pitching, because you might be pitching to one of those brains in the bank, but not the other brain. And it's really quite interesting how the decisions are made. Now, if you put that in a slightly additional perspective of how priorities work. So if you're working in a private sector company, which everyone else, most of us here are, okay, and so I do both. But ultimately, when you have something new coming on, if the businesses I ran, if we decided to do a new activity, the first question from people who worked for me was, what are we not going to do now? Because it wasn't like they had an extra 3 hours in the day that they could just add on, right? Okay. In public sector, you tend to do something new, but you actually never get rid of what you're already responsible for. It's just the way it works. And regulation is certainly like that. So one of the critical things that probably this industry will get more involved with is looking at a lot of the regulatory burden, and this is also financial institutions, that really doesn't add much value anymore. And I wonder, in this volume, how the industry and regulators can actually start to trust each other and actually say, there's a lot of this stuff that doesn't really matter anymore. And why do we spend all this time and money on it, which is really consumers are paying for it. So I think it's there, but I think it's probably a future role of this industry to show how you can actually get rid of some of this stuff and go to the things that really matter anymore. So we're in this, I think it's a transitional period that's starting. I'd say, so if we kind of, it's another way to shift into so we think about what is the role of the regulator today, and these technology changes, developments are really changing how regulation and supervision and stuff is for financial institutions. So what should RegTech, I've kind of jumped the gun a little bit, but Angus, I was going to ask you, what should RegTech be doing?
Yeah, so it's I guess an interesting question. So my role, as I said, is focused on transforming data collection. So Pete, you talked a bit about, ultimately for you to do regulation, you need data. That's your core ingredients, and I talked about a lack of investment from industry in regulation, in the data collection in particular, and in serving our reporting needs. And I think to a certain extent, I can put my hand up here and say I think we, the Bank of England, the PRA, also potentially, I think we have been a bit guilty at times, Pete, of kind of layering regulated data collections on top of data collections without really looking at the holistic picture, without necessarily always thinking about, what legacy collections do we have that we potentially don't need, or we can optimize it in a different way. So I think it's something which we do need to think about, and I think we can do better. So for us in particular, for data collection, there's a couple of things that we're doing, all part of this program that I lead called Transforming Data Collection, which is all about saying, let's take a long-term strategic look at reporting and data collection and try to think, in 10 years' time, what does our world look like, and how do we get ourselves there? And I think we're going to have 3 roles that we need to think about when we're looking to deliver that transformation. The first one, I think, is, and it speaks to this point about, we deliver our content in Excel, which is saying, okay, how can we deliver our content in future? And we talk about modernising reporting instructions in particular when it comes to data collection. So how can we deliver our content in a way that speaks to the world of machines, which increasingly are consuming that content? The second thing is, I think is really important, is about facilitating collaboration. And so when we look at some of the problems we have with data collection, a lot of them really speak to the way that firms manage their data. And if firms can't get hold of their data, and you're a big worldwide global banking entity and you've got 60 entities and 10,000 systems across your whole estate, if you can't get hold of your data quickly across that estate, then you can't give it to us quickly. And we kind of have that problem, but a macro problem across the whole of the financial sector. We need to ultimately, our data is sourced from hundreds of thousands of systems across hundreds of entities or thousands of entities, sorry. And how do we get all that data really quickly? And our role here isn't necessarily doing a lot of work. I think our role here is facilitating work and facilitating and helping industry come together to create the standards that I think are needed to tackle some of these data management problems. And I think the third thing is something I alluded to earlier, which is speaking to us about really taking a step back and thinking about, okay, well, if we have this RegTech landscape, if we're interacting with machines, if machines are doing finance, how does that change about the way that we deliver regulation? And speaking to Claire's point, what opportunities does that present for much faster implementation? So, I can't promise you, Claire, that there won't be tight deadlines in future, but hopefully those tight deadlines will be a bit shorter for everyone and a bit less painful, and we feel like that process is a bit more efficient. And specifically, how are we doing that in data collections? How are we thinking about, changing the way that we ask firms for data and manage our data collection requests? How are we creating standards and organising, collaborating standards, the creation of standards, for the financial sector? And how are we really thinking how to transform data collection? We have a programme up and running. It's called the Transforming Data Collection Joint Transformation Programme. It's been up and running since July. It's about 100 people from 45 different organisations, all regulated firms. It's joint with the FCA, but we're also really keen to, and we do have methods for RegTech firms and other third-party suppliers to get involved. If you do want to get involved, you can go on our website, you can check me up on LinkedIn and give me a shout, and I'll tell you how to do that.
Thank you. Yeah, do you want to?
Yeah, absolutely. I think the point that you made, Angus, about that machine-readable content, data in terms of textual data, is absolutely key, right? Speaking back to our earlier discussion about the volume and velocity, unless this regulation and related content to it is written in that structured way that can be processed at scale in pretty much almost real time and translated as well, and it has to be searchable. It needs to be quite easy to kind of extract certain rules and sections from that. And it comes down to how it's written in the first place and kind of modernizing from the centuries-old practices that are still happening today. Like that to me is one of the key elements. But also this collaboration point you mentioned, I think RegTechs can play a pretty good role, an important role in that, because we are in between the financial organizations that are trying to comply and struggling to meet these deadlines and interpret the regulations, and of course the regulators and legislators and issuing bodies at large. And so in a way we can kind of, through again data analysis and behavioral data, both explicit and implicit, identify the particular regulations that might be more risky or there's a lot of kind of action around them. There's kind of a two-way kind of communication loop that can be facilitated by the central players, the vendors in the RegTech space.
Thank you. Do you want
Yeah, I think I've got a question really, I guess mostly probably directed at Yin. So we've definitely, the FCA has talked in their most recent business plan about how it wants to be a data-driven regulator.
Yes.
It's definitely doing a lot more. They had Project Innovate, then they had the call for input, and then they've been doing these tech sprint events.
Yep.
How joined up is the FCA, or regulators generally, with the RegTech sector as a whole, the way they've done in the past with FinTech? And do you think the regulators have the right people with the right skills to look at this? Angus excluded.
Oh my goodness, I have to answer this question as diplomatically as possible. So I think at a high level, there's a lot so yes, but there's a lot that can be done for both of your questions, Claire, and this is my first time being asked a question on a panel by different panelists. I love that kind of spontaneous collaboration. It's great energy. So I do think, I can't speak for every RegTech vendor, but we are trying to maintain and establish connections with as many regulators as possible, including the FCA. It's kind of early stages, but the key thing is you need to have that dialogue and show that we can add value both sides, to the regulator and to the regulated entities. The skill set side of things, again, I don't want to comment too. I think Angus is a great example of the fact that yes, the skills are there. I mean, look at what he's saying, the data transformation initiatives. Obviously, the skills gap in terms of those technical skills required to understand and make the most of advances in AI. I think every sector, so the private sector, the public sector, regulators, RegTech vendors as well, and certainly banks and financial services organizations, I think we all face a similar issue in terms of the skills gap, right? It's hard to really make any concrete observations without potentially offending somebody. So I'll stop there and say that it's a common issue, but I think the minimum is being met.
Thank you.
Can I just a couple of quick points in response? I think I actually won't comment about the skills. Obviously, I think everyone that works at the bank and the PRA and the FCA are great, so I won't say too much about that. What I will say is I think for really to kind of drive this push forward from for the regulator, I think there's a couple of things which are barriers. One is people I think struggle to understand the responsibility the regulators have when they're regulating the financial sector, and I guess the worry that they have about how, if they're publishing regulations in new ways or we're doing new things, what impact that might have on our ability to regulate and on legal and policy impacts and FISMA and all the rest of the acronyms and legal framework, etc. So we need to think really hard, and we need to be really confident before we make any radical changes to the way that we regulate, and that takes time to build that confidence. The second thing I think is kind of holding us back is all this stuff is so new, and we haven't got anywhere. I haven't really seen anything around the world looking at this space where we can point to and say, yes, right, we've saved X amount of £1 million and Y amount of time in regulatory change by doing it in this new way. And until we start to get those kind of business cases, until we kind of get that data, it's very hard for us to go to senior regulators and senior people in banks, etc., and say, look, we need money to invest in this because it's going to save us this time, etc. So I think that will come, but it will take a bit of time.
I think the institutions have to play a big part in this role. And I'd say the perspective in the room is a little bit more towards the UK. But if we put it another way, when I joined UK regulation, I had to go to a number of European meetings. And one of the first things that I got thrown into accidentally was actually pay regulation. It's a fascinating world of everybody's interested in what everyone else gets paid and why. But no one would want those questions asked to themselves generally. But I go to a meeting on the continent, and it was very much European government driven. The UK was interested at the time. And I met with a regulator from one of the European countries, and he said, well, I've just only had the documents today, and I'll get to them tomorrow. And he said, I have my other priorities. I said, what else do you do? He said, well, I do capital and liquidity, and now I'm doing pay. And I said, oh, do you do those between 2 o'clock and 3 o'clock, or 4 o'clock and 5 o'clock? And he kind of laughed, and he said, well, you should hear about the other responsibilities I have, right? So when you start thinking about well-resourced regulators, that probably is almost an oxymoron in a way that, regulation and most regulators in the world will never have the technical capacity to, really keep up with what you're after and what financial institutions have and can do. And so those expectations have to be kind of more realistic. And it's almost as if what regulation is trying to do is raise the bar for people to provide that quality. But the skill set to double check those things, I wonder if it'll ever be there. I started in banking. Literally, the regulators came in and locked your file cabinets, and then they took out the files and checked that all the papers were there. They're not going to go through millions of lines of software and check that there's no error in it. And so these things are what our expectations of regulation are difficult. And especially most of the world's regulators, just the great 95% of them will never have the capacity to do most of these things. But institutions can make themselves dramatically more efficient by using it. So I think it's an interesting time for us to try and switch and do some questions. So the Umbrella has thrown up some interesting ones for us, and it's kind of, one of the questions was just relating to what I've just started on is there a time, is this the time for a mindset change that RegTech is actually, instead of a drain on resources for institutions, is RegTech actually a way to save money for financial institutions? And I think that's probably something that, Ian, do you want to start on?
I'd love to start. This relates to that fantastic word that Claire mentioned in her first answer to your question, culture, which is closely tied to behavior and mindset. I think it's probably the single biggest risk to successful adoption of RegTech firms and their technology, right? It's that mindset. That's the barrier. It's more internal, perhaps, than external. And so it's interesting because, we are creatures of habit. So while the Excel spreadsheet is, you can quantify the number of hours versus, the RegTech solution, but even if you quantify it and it's 1,000-fold more efficient and effective, at the end of the day, we are creatures of habit. So it's more difficult to let go of the traditional processes, even if they're inefficient and proven numerically so, than we might think. It's that two-brain thing, but let's call it this time the rational and emotional brains, the kind of classic dichotomy there. It's a great question.
I think for us, I mean, the big thing, as Yin was saying, the big thing for us is, making sure if we're going to invest, and sometimes it's quite significant outlay on RegTech, is getting management buy-in. And I come back to our colleagues in the US who don't always have the same regulatory imperative, particularly in our sector, who don't understand the need for that spend, and don't understand the amount of time we actually spend. We have a team that looks at policy and horizon scanning and regulatory developments, which just doesn't exist in the US in the same way. So it's getting buy-in from our colleagues that we need to spend that money, and that actually what we do spend it on will add value and will give us, streamlined processes and will give us operational efficiencies. But getting agreement to spend that money up front is often quite difficult.
Yeah, I mean, I guess it speaks to the point I was making earlier. I think that there's been a bit of a mindset, certainly I think we see it in data collection of firms kind of saying, well, yeah, maybe next year will be better, or maybe next year regulation will go away, we don't need to invest in this stuff. And I think we kind of got to get over that. Regulators, firms, everyone's got to get over that and say, look, regulation is here to stay. It's important. The question is not, do we have regulation or not? The question is, okay, how can we manage that regulation efficiently? How can we make that regulation useful? And I also think that if we can have those conversations and we can work together a little bit on this, we can get to better regulatory outcomes. And I think that will also help firms kind of buy into regulation more. And I do think there has been, again, putting our hand up, and I think it came out in our review last year. We have been guilty at times of perhaps not optimizing our regulation, perhaps of asking, not thinking about our legacy request and saying, can we turn this stuff off, etc. And I think that's a really important process for us to go through, to really focus on those goals. Let's make regulation more efficient, and hopefully we all can see something to invest in as well.
Thank you. So next, if I could, right, so there was a second question on the umbrella was for us. This hybrid is a question about this hybrid working. The hybrid working model make more regulation inevitable? Are we going to get more? Right? And I wondered if I might start the answer to this in a way. We've been talking about, is there too much regulation? Is there regulation? One of the real challenges is should a regulator actually just create regulation because they think there's a problem? Okay, and it's a really interesting question because I've been asked this a lot about crypto things lately, and there's this massive movements about digital asset regulation, all these things like that. Almost all regulation that we have is actually a reaction to a crisis. You want to think, why do we have this massive regulation after 2008? Well, actually, there was a general agreement that the marketplace wasn't working right, and it had to be fixed in some ways. The solutions necessarily weren't palatable to everybody. But generally, banks were first really regulated after the Depression. The securities market after the securities market fails, right? So if you start saying, well, you have to have this general agreement. So it's interesting to ask this question about hybrid working, which creates all kinds of new risks and reporting sides. But I wonder if we really have regulation, or should, if there isn't some gap that's shown. Because I certainly expected when COVID started to be reading about massive increases of fraud happening because of this, but I haven't. So it's one of those things that you just wonder about. Does the regulator go first because of something? And so, do you think hybrid working, does it change anything? I was going to say I don't want. I'll stop.
So the FCA actually put something out this week, earlier this week, about evaluating firms who are moving to remote or hybrid working models. And they're going to evaluate firms on a case-by-case basis, which makes sense. I think one of the things they said is that they can turn up to any place where regulated activity takes place, which means they could turn up to residential addresses, which seems a bit weird to get a supervisory or an enforcement visit from the FCA at your home. But then the thing that I'm most concerned about isn't the operational and financial risks that have come out of COVID. It's more the sort of the loss of cultural capital that we've seen. the ability to influence culture has been diluted by everyone working from home. You're not able to, sit around and, particularly for new joiners who can't work out what the culture is of an organisation by sitting on team meetings all day. So that's my biggest concern. I'm not sure how the regulator would regulate for that. You can, for operational and financial risks, you can put more systems and controls and hard stops in place. We've definitely seen an increase in cyber fraud attempts, which we can manage, but it's more the cultural aspects and the intangible side that I'm more concerned about.
No, I think the cultural aspects are enormous. And I think my personal view is that actually for the last 2 years we've been living off of invested cultural capital. We knew who we worked with when we didn't work with them anymore. But all those new employees that we've taken on don't have it. And new business relationships don't have it. And it's a pending disaster in many ways. So, Angus, do you want to, any thoughts on hybrid working?
Yeah, I think it's, well, I guess there's a couple of points about whether we should regulate hybrid working. I mean, I'm not, don't work in the PRA, but we have statutory goals that are laid out in legislation, and for the Bank of England and the PRA, it's pretty much we need to strive for monetary and financial stability, and everything we should do as regulators and central banks should be in pursuit of those goals. And whether that's if hybrid working presents a serious risk to financial stability, then I think it's right for the PRA to create legislation and regulation that hopefully mitigates those risks. On this point about cultural capital, completely agree. We just trying to set up a big project, as I said, across 45 different organisations. We've been primarily doing that online. It's been difficult, as you can imagine, particularly because of that, trying to get people to bond together, create a bit of a culture of a team, trying to understand each other much better, much more efficiently. So it's lovely to be back here, speaking to you and seeing you all face to face, and also seeing my colleagues face to face too.
Thank you. I just wanted to try and see if we can. Oh, it looks like I'm flashed that we're out of time. So if I could say thank you very much to the panel, I thought I was doing well, and I look forward to meeting you. Thank you. Bye bye.